tariffs are back in the news. We'll take a look at the latest from the Trump administration and China and see where everybody sits right now. Also, we did wrap up the month of May in the stock market. We'll take a brief look at how May went and see what June and July might have for us historically. Also, stick around till the end. I will show you an easy way where you can potentially see where the big money is flowing right now and whether or not we are headed back into a risk-on environment. Don't forget to like, subscribe, and follow wherever you listen to podcasts. Now, let's get into it. Welcome back to Stonkcast, the market show for the average Joe, whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back. And we got a market prep video set for you here, so let's jump right into it. Want to kick it off with some tariff news. We know how tariff news has been moving the markets lately, and we did get a new report from CNBC. Trump advisors defend tariffs amid legal fight, insisting they are not going away. So if you recall last week when we did the midweek check-in, we had some breaking news at that point that essentially a federal court blocked Trump's tariffs, and so the Trump administration said, okay, we're going to appeal that. And as you can tell from this article here, they are, the Trump advisors, that is, they are going to defend the tariffs amid the legal fight. They're not going away. So President Donald Trump's top economic advisors maintained confidence on Sunday that the tariffs are not going away as a key tenet of Trump's policy agenda hangs in legal limbo. Rest assured, tariffs are not going away, said Commerce Secretary Howard Lutnick on Fox News Sunday, days after a federal court ruled that Trump overstepped his authority when he imposed the sweeping tariffs. A federal appeals court later granted the Trump administration's request to temporarily pause the ruling, giving the White House some breathing room, but officials now stare down a potentially arduous legal battle. So, as of right now, they are appealing it. The federal appeals court granted the Trump administration that request, and it seems like inevitably this will most likely end up in the Supreme Court, if I had to guess. I'm no legal expert, but it seems like that's where it's headed. But as of right now, the Trump administration does have some breathing room, as the article said, to essentially continue President Trump's agenda, right, as it relates to tariffs. And the trade negotiations are obviously still going on, but this is going to be an ongoing story that we want to pay attention to. And one interesting thing I will point out, if you remember in April, any type of tariff news that we got moved the markets dramatically, even historically in some cases. Think back to April 2nd, reciprocal tariffs and the volatile moves downward that we got there. Remember the historic move up that we got when Trump announced the 90-day pause. So we had some volatile moves in April, and it just feels like of late the market has really adapted to any type of tariff news, and the moves have been a bit more muted. The market is growing accustomed to just a constant stream of tariff news. There's never a dull moment in a Trump presidency, right? So that's where we stand right now. And speaking of, ongoing talks, we had this article that came out as well. Basically, you got China's President Xi Jinping, and this article says Trump and Xi are likely to talk soon about trade, though no date has been set, it says. So taking a look at this article, National Economic Council Director Kevin Hassett suggested on Sunday that President Donald Trump and China's President Xi Jinping could have a conversation about trade as soon as this week. Hassett said, however, that a specific date for a conversation between the two leaders has not been set as of yet. President Trump, we expect, is going to have a wonderful conversation about the trade negotiations this week with President Xi. That's our expectation, Hassett said on ABC's News this week. So if you recall last week, on Friday, President Trump put out a Truth Social tweet, comment, whatever you want to call it, essentially calling out China for not upholding their end of the bargain based off of what was discussed between the two countries in Geneva a couple weeks back. And so that obviously sent negative waves through the market, escalating tensions yet again with China. And basically what we're hearing right now from Kevin Hassett is that the two leaders are expected to meet soon, which is good. That's good news. And people do need to keep in mind that it's not as if everyone's just been holding their breath waiting for China's president and the U.S. president to talk. You got to keep in mind that there are respective parties on both sides that have been talking this whole time. As Hassett said here, I'd like to also add that people are talking every day, noting that U.S. Trade Representative Jamieson Greer's team is talking with their Chinese counterparts every day, trying to move the ball forward on this matter. So those are, some of the things that are happening that we don't necessarily see always in the news. It's not as catchy to say, hey, Jamieson Greer's team and China, they talked a little bit today and nothing really came of it, right? But those are all steps in the right direction. Obviously, the headline grabber is going to be that, Trump and Xi Jinping are, planning on meeting. So just keep that in mind. The two countries are still talking, and that is a positive sign. And then hopefully Trump and Xi Jinping are going to meet this week. Again, no date is set just yet, but I would imagine it would happen, fairly soon given the pace of things. And you also have to keep in mind the pause, and now you have the appeals court situation for Trump and his administration. So I'm assuming they're going to want to get the ball moving fairly quickly on this. So we will keep tabs on that. And moving on here, let's take a look at how the month of May did. Remember the old adage, folks, sell in May and go away. Well, guess what? If you would have done that this year, you would have missed out on gains. The S&P 500 finished out May up 6%, which, given everything that's been going on with trade policy confusion, I would classify as pretty impressive. If we take a look at the heat map from Friday here, it was pretty muted, kind of mixed. We didn't really see anything too crazy going on. Palantir, the exception there, continues to rip higher, closing in on a new all-time high. So that's impressive. But if we take a look at the S&P 500 and how that's doing right now, basically we are about 3% away from a new all-time high, which is pretty wild. And again, we're up 6% for the month of May. The VIX right now is currently sitting at 18.57 at the close on Friday. So we are below 20. That is good news. We want to see that continue to stay there. But as of right now, it's looking okay. Obviously, any type of erratic news headline could change that in a moment. Keep in mind that Monday this past week, we did spike up to 25 on the VIX. I believe that was due to some tariff news. I'm forgetting what it was now, but there was something that came out Monday that had it spike up like that. But as you can tell, throughout the week, we've continued lower this past week, the last week of May. And right now we're sitting under 20, which is good. So as far as SPX, the indice that tracks the S&P 500, currently sitting at 5911, above the key level, in my opinion, of 5900. And again, like I said, we're just about 3% from a new all-time high. So that is also good news. We'll see what the week ahead looks like as we head into a new month. Want to give you real quick an economic calendar breakdown for what we have coming out this week. We do have a lot of data coming out, folks, so a lot to pay attention to. Monday, June 2nd, manufacturing PMI comes out at 9:45 a.m. Eastern. Definitely want to pay attention to that. Manufacturing is not as heavy in the U.S. as services, but it is still a cyclical industry sector and basically can give some clues as to what kind of economic cycle we are in. So I would definitely be paying attention to it. It's going to be more of a volatile data report that we get historically. anything above 50 is good. Anything below 50 is not good. The previous number we got for manufacturing PMI was 50.2. The forecast for tomorrow is 52.3. We also get ISM manufacturing PMI and ISM manufacturing prices coming out at 10 a.m. Fed Chair Powell is speaking tomorrow at 1 p.m., folks. Definitely want to pay attention to what Daddy Powell has to say. So we'll see how that goes. You get the JOLTS job openings coming out Tuesday, June 3rd at 10 a.m. We're basically going to find out, hey, how many job openings right now are there, right? And so if you get a stronger reading than what, the forecast is, then that's good. And obviously if you get less than that, you see contraction in the job market, that's not a good thing. So basically the previous reading that we had for JOLTS was 7.19 million. So we're looking to see if that holds steady. Hopefully we get a bit more, but we're looking at those job openings for April. On Wednesday, we get ADP non-farm employment changes. We also get services PMI. We get ISM non-manufacturing PMI and prices. You get crude oil inventories. I mean, we got a lot this week, folks. Thursday, initial jobless claims at 8:30. And then on Friday, we're going to get some average hourly earnings reports coming out. Non-farm payrolls at 8:30. Unemployment rate coming out at 8:30 as well. So we got a doozy this week, in my opinion, as far as economic data goes. Definitely want to be mindful of that. If you are swinging any type of positions this week, these are catalysts I'm watching. And so, I would recommend paying attention to them when it comes to your sizing on any type of swing trades that you're doing, because these are reports that will move the market, and they will be moving the market in most cases in pre-market. And so especially if you're dealing with options, you obviously can't trade those in pre-market or after hours. So you want to be mindful of those positions. So let's take a quick look at seasonality according to the website Equity Clock. I want to take a brief look here at what June historically looks like. This is a 20-year time frame, essentially showing historically over the past 20 years, how does the S&P 500 do in any given month, right? And so if we look at the month of June, honestly, it's pretty muted. Not a lot really going on in the month of June. The average return for the month of June over the past 20 years is just under a tenth of a percent, minus a tenth of a percent, right? So basically flat. So not a lot happening there. But as I noted a couple episodes back, if we look at this on the graph here, according to Equity Clock, it does kind of look like, it's muted at the beginning of June, and then on the back half of June, historically, we get a bit of a drop, right? It looks like the bears kind of take over towards the second half of June. But then what's interesting is if you look at July, historically, July is a very, very bullish month for the S&P 500. Basically, you're looking at a max return in 2022, not that long ago, that was 9.1%. That is a big move. And if you take a look at on average, basically July returns 2.5%. So I like looking at seasonality. I think it's important to be mindful of, and you can definitely use it to build an edge, especially if you're more of a swing trader where you're holding positions for more than a couple days or maybe even a week or two. These are these are data points that can be helpful to you in looking for setups. For me, the month of June is a great time to essentially look at some setups for the month of July, because July is historically a bullish month. And if you want to get in for a swing trade for the month of July, now would be the time in the month of June, where things are essentially kind of just consolidating, kind of stagnant, right? So let me know, though, what your best swing idea heading into the months of June and July are. What's on your radar there? And then lastly, want to point out a free resource that might just help you see where the money is flowing. This website here is FinViz. It's free. It's an amazing website. They got screeners on here, a bunch of different features on here. But the reason I want to highlight this website for today is because as we look at the market lately, after those April lows, we're basically in an environment, as I said earlier, where we are 3% off of all-time highs. And we still have volatility. You still have a lot of wild cards up in the air right now as it relates to tariffs, for example. But it seems like we're having a regime switch in the market. And so one thing that you can do to get an idea of where big money is going, right? And when I refer to big money or smart money, I'm talking about giant institutional funds. You want to follow the money, essentially. You don't want to be fighting the big orders that are coming into the market, whether it's on the buy side or the sell side. But as we've kind of talked about in the past, you have certain sectors in the market that are known for being defensive. They are known to be safe havens, generally speaking, when there is uncertainty in the market and when the market is performing poorly and the VIX is above 20 and we're having a sell-off, right? And one of those sectors is healthcare. And one thing that I noticed on here that's very interesting to me is that if you look at the 1 month performance, the way I found this on FinViz, you just go under groups and it lays out the 1 day performance, the 1 week, the 1 month, 3 month, half year, 1 year performance for the various sectors in the S&P 500. Just focusing on the 1 month, right? We're keeping it somewhat short term here. Healthcare was the only sector that was negative. Now, you have to keep in mind, this is in part kind of skewed when we talk about United Healthcare and the DOJ investigation. That's a large portion of this sector. But, the point is very simply that the worst performing sector over the past month is one that is historically known to be a defensive sector. So what does that tell me as a speculator, as someone in the market? That tells me the big money is leaving defensive stocks. Big money is leaving defensive stocks, but where are they putting it? Well, if you look, the top performing sector over the past month is technology. Technology was up 10.56% over the past month. And technology, folks, is a very risk-on sector. It's a very, speculative sector. And so basically what's jumping out to me based off this 1 month performance chart here of the 11 sectors of the S&P 500 is we have the top performing one being traditionally a risk-on sector and the worst performing one being a risk-off sector. So does this mean for certain that, big money is all in on a risk-on environment and the market is going to go to all-time highs and even higher? I don't know. I'm not a fortune teller. But these are tools that you can use to build strategies, right? To build a plan and to kind of get your head around what you could be looking at for the next, couple months, or maybe even shorter than that. If you wanted to look at something shorter, you could look at 1 week performances. But I'm just looking at it from the standpoint of, hey, June is usually a choppy, pretty quiet month historically over the past 20 years, but July is very, very bullish. And on top of that, we have the technology space over the past month getting a lot of inflow. So that is something to pay attention to, something to keep on your radar. Let me know what you think about that. What are some sectors that you're paying attention to? What do you think is going to move? Do you think Palantir is going to continue to crush it? It doesn't seem like there's anything stopping that stock right now. But let me know what you think. Drop a comment. I appreciate the support as always. If you haven't already, check out our mini series that we just started yesterday on trading psychology. We're covering The Disciplined Trader, written by Mark Douglas. It's going to be a 5-part mini series coming out once a week. So we put out part 1 yesterday. Make sure to check that out. And then prior to that, we put out the Intelligent Investor mini series. That was a great one. So if you're into long-term investing, make sure to check that out. I will be back Thursday morning, 8 a.m. before the bell for a market midweek check-in. Thanks as always for the support. Definitely appreciate it. Make sure to like, subscribe, and follow wherever you listen to podcasts. And remember, folks, plan the trade and trade the plan. Have a good one.